Unusual activity found here in Key, and we're going to tell you where that was just in a second. But first, we're going to look at the weekly chart here. The past 2 weeks that we placed in here, a big red candle, obviously last week. So far this week, a green candle. But the lows of each of these weeks is starting to match up nicely here with our lower trend line that we have placed from back in let's say April of 23 and then October of 23. And we just kind of hit those two touch points, extended that trend line. And it looks like the lows from the past 2 weeks have matched up nicely with that. So that whole area is going to be a nice support for us. So we're going to see if this lower trend line is respected going forward. So that is currently going to be right around that 1260, 1250 area. I know the lows in here, 1273. And then this week we had a low of 1278. So it hasn't broke below the 1270s yet, but really that 1256, 1260 area, that is going to be the major touch point that we're going to be watching here on this lower trend line. Obviously, it's not exact. We're on the weekly chart here. So that whole area is going to be something that we have to watch for in here. Now, also on the weekly chart, what are we looking at? Well, obviously, green candle in here this week. Figured the volatility would contract a little bit of green week because of what happened last week. That so far is what's happening in here. And we are closing above this 1320 area, which is key. Now, the problem is closing above and holding this 1320 area. Our next resistance isn't up here until we get to this $15 area. But the problem is back in December of 23, going into right around July of 23, it looks like we were range bound within this area for quite some time. So you had right around 7 and 8 months or so that is just kind of range bound in between those 13s and that 15. So $2 channel in there. So that is something we're going to watch for as we hold above this 1320 in here to see if we are going to rip up and then bounce off of this 15 and then kind of consolidate and try to keep on knocking out the door on those 15s and break them. Or are we just going to do what we did back here where it kind of sits and it's wrapped around 90 EMA? Oh, here's a little 9-day EMA. Oh, there's a breakout, consolidate some more. There's another breakout and then finally go back down. Hit the support here and then work its way back, then break, and then come back down. And so we're going to have to wait and see because this is 8 months in the making right here. I just kind of summed it up within 5 seconds there. So we have to see, are we going to be respecting these and then eventually breaking this 15 and working our way up to the 17s and this 200 SMA up here? Or is this going to be one of those another 7, 8 long months of just range bound in here with that $2? Not quite sure, but all we do know is that our RSI is completely oversold. We're on some volume in here, and that is good. Our lower trend line here is becoming a good support with us, and it's also getting to start to match up with that 1320. So everything's kind of matching up in here for us to take a run up into the 15s. The problem is, what are we going to do when we get there? Are we going to break, or are we going to keep on bouncing off of it and then start consolidating more? We mentioned the 200 SMA as a resistance above the 15, and above that, it's going to be this $20 area up here. That's going to be your upper trend line. So that is those are the concerns here of what we're looking at support wise. 1320 obviously is going to be the magic number. Below that, we mentioned the lower trend line, 1250, 1260, 1270, somewhere in that area. And then below that, really not a whole lot of anything until you get to 1077s. And then you have a better support down here right around that 960 area. If we go into the 30-minute chart, you can kind of see how the whole stock reacted just today. So dip and open. And then obviously we hit those lows in here right around 12 o'clock, 1 o'clock in there. And then a little bit of recovery and then just kind of fading off into the end of the day. And then obviously you had that pop in the last 30 minutes of the trading session today. So all in all, that's kind of what we're looking for. But we did have some unusual option activity in here. And if I could pronounce it right, it's going to be the 11.5 puts expiration 4/17. Right around 33,000 of those were traded in here today. So your April expiration, 11.5 puts, 33,000 of those traded in here today. So unusual activity in here on the put side. So we're going to see what happens in here right around a $2 move is what everybody is playing on those puts away from where we are currently trading. Speaking of expected moves, right around 60 cents expected by Friday's expiration. You have a $1.12 expected move by next Friday's expiration. If you go all the way out to May expiration, right around a $1.50 expected move in there. And you do have earnings coming up before market on April 17th. So next Friday, or I'm sorry, next Thursday, that is, you have earnings coming up before market April 17th. So we're going to see what happens as we get closer to that. Maybe we might get a little pop. Maybe all of this RSI and this volume here might be setting up for a run into earnings next week. We will see what happens. But again, keep your eye 1320. You're looking at the 15 area. Above the 15 is going to be 17. Below that 1320 is going to be the 1250, 1260, 1270 area, wherever this trend line decides it wants to match up at. And then below that, really nothing until you get down here to around the 1080s or even better, that 960 area. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.